Hello, my name is Jingonelli, and today we are going to be looking at another tutorial. But before I begin off, make sure you subscribe to the channel. It will bring you some good luck in your forthcoming exams. Today we are going to be looking at the disposal or retirement of fixed assets. And I'm going to require you to follow my cursor so that you'll be able to follow up properly. So with this, what you should know that when fixed assets are worn out or become obsolete, or useless, they are disposed of, or what you can call sold off. Note that disposing of an asset is not like an ordinary sale of goods because it's not routine but incidental. For that matter, it should not be credited to the sales account, but rather the cost of the asset is transferred to the account called the disposal account. That will be on the debit side. So the accumulated depreciation is also closed off to the disposal account so as to determine whether there is either a gain or a loss on disposal. If there is a gain on disposal, it is credited to the profit or loss account as miscellaneous income. And if there is a loss on disposal, then it is debited to the profit or loss account as an expense. So with disposal, we are having accounting entries that are required for the disposal of fixed assets, which are going to be in 4 steps. But before we handle them, note, remember, during normal usage of the business asset, it depreciates over time. So if we are selling it off, the asset will come, the asset will go away, and also the depreciation it has accumulated over time, called accumulated depreciation, will go away. So after that, we recognize cash or bank as payment, but we do not know if this cash is a gain or a loss. So then lastly, we close the disposal account to the POL account to determine a gain or loss on disposal or selling of that asset. For this, the disposal caters for the selling off of the asset. You can call it disposal or selling off that asset. Hence, we make the 4 accounting entries. So these are the 4 accounting entries. The first one, to transfer the cost of the asset to the disposal account. So when you're transferring the cost of the asset being disposed of to the disposal account, so this is what you do. These are the entries. You debit disposal account and also credit non-current asset with the cost of the asset being disposed of. So what you should know, if at all we're having an example here, if the asset was originally bought at 10 million, then disposing it off will look like this. We shall debit disposal account by 10 million and also credit non-current asset account by 10 million. So we always debit disposal account just to transfer the cost there, the cost of that asset there, and then we credit so that we can so that the non-current asset we credit because non-current assets reduced by crediting. And in this case, since we are disposing of our asset, it will mean that it is reducing. So we need to pass a credit entry. Then transfer the accumulated depreciation of the asset being disposed of to the disposal account. And then this is the double entry. We are going to debit accumulated depreciation account and then credit disposal account. So when it comes to this step, you must calculate depreciation first, since accumulated depreciation comes from depreciation, And originally the entries are you debit depreciation and then credit accumulated depreciation. So if I want to reduce accumulated depreciation, I will just pass a debit entry as shown above here. So if I want to reduce accumulated depreciation, I'll just pass a debit entry as shown above. And since we are disposing of an asset to complete double entry, a credit entry is passed to the disposal account. This one, it's passed to the disposal account to transfer accumulated depreciation there. So the third one is on sale of the asset. On sale of the asset, record the receipt of cash by debiting the cash book. That can be the cash column or the bank column, depending on the type of account that is being affected. If they gave you cash, it is the cash account being affected. If they gave you a check, it is the bank account which is being affected. And crediting the disposal account. So you can see that with this disposal, everything that we shall be handling, we always transfer it to a disposal account. So you can see even this one, after recognizing the cash, you credit to disposal account. So this step, you recognize the cash payment that has been received from the sale of the assets. Remember, even still at this stage, you don't know whether you made a profit or a loss. So it is the fourth step that will either tell us that you made a profit or a loss. So on closing the disposal account to the profit and loss account, the balancing figure is either a gain or a loss on disposal. So taking part A, where I'm going to look at the gain on disposal. So with this, with the gain on disposal, by the accounting entries, it is debit disposal account and then credit profit and loss account. So if I told them to draw a T account of the disposal account, the balancing figure which will be on the debit side will be the gain on disposal. So this is what I want you to note. The POL account increases by crediting. So since a gain is an income, to show that income is increasing, the POL, we shall credit it. So if at all we want to show that we got a gain on disposal, and that gain on disposal, since it's an income, it's increasing the POL, we shall credit it. So this is what is happening. That is why when you go on these entries, you see that they are crediting the POL, meaning it was a gain on disposal. So with just a simple illustration of the POL, you're having the sales, cost of sales, then GP, then where you say add miscellaneous income, this is under it, it's where you're going to find the gain on disposal. So this is it. This is what they mean by crediting the profit or loss account. It will mean it is increasing, and then less operating expense, net profit. This is the main thing here. So after knowing that, we are part B, which is talking about loss on disposal. So for loss on disposal, we are going to debit profit or loss account and then credit disposal account. So if at all I draw a T account for disposal, this is how it will look like. The balancing figure is going to be on the credit side, and that will be the loss on disposal. If at all you get you're in a situation whereby the balancing figure is on the credit side, that will be a loss on disposal. So I also want you to note here that the POL reduces by debiting. So since a loss is an operating expense, to show that a loss is reducing the POL, we debit it. So you can see from these entries, we want to show that it's a loss on disposal, and the only way we can show that it's a loss on disposal, since POL is reducing, we are going to debit the profit or loss account, and then credit disposal account. So this is how it will look like for the illustration of the POL account. So we're having the sales, less cost of sales, GP, and then add miscellaneous incomes, and then less operating expenses. So you'll find it under the operating expenses, since operating expenses reduce POL, so you'll find it under there because it's a loss on disposal, and then a profit. So that has been a simple illustration on that. Then we are going to handle an example. We're having it's saying a computer was acquired on 1st January 2020 for 2 million. It was then sold off on 31st December 2023 at 1.6 million cash. I want you to know that whenever you're doing this question, the day it was disposed of, it's always key. Since we're dealing with disposal, it's always key. It will always mark our endpoint in case we are trying to do something, as I'm going to show you below. So this computer had an estimated useful life of 10 years and 0 scrap value. So assuming that the entity uses a straight line method of depreciation, required prepare computer account, computer accumulated depreciation account, computer disposal account. So the methods which they can ask you per different questions, can ask you reducing balance, straight line. So you must prepare yourself in terms of all those methods. Solution and explanations. We're going to first draw. So when you look at the required here, it's asking for the 3 accounts. So when you're doing this question, you're going to draw the 3 T accounts separately on different pages. The one of accumulated or the one of computer account, accumulated depreciation for the computer, then the computer disposal account. If you want, you can use that same order to draw them. Then you use the 4 entries to do the number. So whenever you're doing this number, you must think of the 4 entries that I showed you that are up here. Anyway, we are going to go through them in detail. So for you to know that you have fully completed this number, you must go through the 4 entries. And the first one is to transfer the cost of the computer to the disposal account. So the first one, since it's saying debit disposal account and then credit computer account. Now this 2 million, it's the original cost. It's the original cost of this computer, which is 2 million. So you transfer the cost to the disposal account, and this is what you do. You debit disposal account 2 million and then credit computer account by 2 million. And I told you that assets reduced by crediting. So I'm going to pass a credit side because computer as an asset is reducing. So since we are dealing with disposal, the date when the asset was sold off is always going to be our stopping point. The reason why I say this, they told us to draw a computer account. So per the first question, you can see that it was 1st January 2020 that this is when they acquired this computer. So they acquired it by cash. They acquired it by cash, as you can see here. They acquired it by cash. Here, it was also meant to be cash. I forgot to put that. So by cash, by cash. So I'm going to say here cash of 2 million. I've removed the 3 zeros and I've catered for it here. So this is acquired it on 1st January 2020, and this is the cash. So by the end of 2020, December, 31st December, that will be balance carried down of 2 million still. Now, I make this balance carried down become my balance brought down in the next year, which is 2021. So I also want you to note here that
since this person did not buy another computer throughout the entire year, if he did, I would put it in the respective years. For example, if at all he bought another computer in 2021, I'll after me putting this balance carried down, I'll come and I say maybe that date where he purchased the computer, and then I say 2021, then I say cash of, let's say, 5 million, if at all that person purchased another one. But in this question, this person only purchased one computer, so I keep on continuing until I reach my year of disposal, which will be my stopping point. It's what I was mentioning earlier. So that is going to be my my stopping point. So this is 2021. So this then I go this side to get a balance carried down as 31st December 2021, which is going to be still 2 million. I close off. Then this is going to cross, and it's going to be my opening figure in 2022. So 1st January 2022, balance brought down is going to be 2 million, and then I get my balance carried down at 31st December 2022 as 2 million. I close. Then still I go to the year of disposal. So 2023 is my year of disposal. So 1st January 2023, balance carried down is going to be 2 million. And you're going to see that this time round, I'm not going to say balance carried down to the next year, but I'm going to just close it off to the disposal account, because this was my year of disposal. So since this was my year of disposal, I close it off to the what? To the disposal account. So 31st December 2023, it goes to the disposal account as 2 million. So I take it to the disposal account, but on the debit side. And this is hence completing this double entry here. Transfer the cost of the computer to the disposal account, which was 2 million. So I'm done with step number 1. So step number 2 is about depreciation. So transfer the accumulated depreciation of the asset being disposed of to the disposal account. So before you do anything, I want you to know that under this step, first deal with depreciation, and we know that the accounting entries of depreciation are debit depreciation expense and then credit accumulated depreciation expense. So since the question told us to use straight line method, this is finding straight line method. Straight line method, depreciation expense is going to equal to cost minus scrap value out of n, which is number of years. So in the question they gave us 10 as our number of years. The estimated useful number of years, it was 10 years. So it's going to be 2 million minus scrap value, which was 0, divided by 10, giving us 200,000. So this will mean that every year the depreciation expense is 200,000. So just a simple schedule of what I'm talking about. It will be like, if at all we're having the year 2020, 2021, and 2022, and then 2023, which is going to be our stopping point since it's our year of disposal. The depreciation expense per year is going to be 200,000, 200,000, 200,000, 200,000. Now, accumulated depreciation for the first year is going to be 200,000. For the second one, it's going to be 200,000 plus this 200,000, giving us 400,000. For the one of 2020, it's going to be 400,000 plus 200,000, giving us 600,000. The one of 2023, it's going to be 600,000 plus 200,000, giving us 800,000. So I've tried to label these as N1, N2, N3, N4. So these N's, we are going to use them when we are drawing our T account for accumulated depreciation to show it how it will appear via the accumulated depreciation T account. So this is our year of disposal, so it is where we shall end. So I also want you to note that in case there is time apportionment in the year of disposal, For example, that asset, for example, if the asset was sold on 31st August 2023, we will need to know depreciation per month. So we will pick only for 8 months. This will be 8 out of 12 times the 200,000. This 200,000 here. So that the portion we get here, we drop it here. So that now when we want to get the cumulative depreciation for 2023, it will be 600,000 plus the figure we have gotten here from this, and then we add it here, and that will be our what? Our accumulated depreciation for 2023. So that's why I told you should be keen with these dates. So if at all it's 1st August 2023, it will be 7 out of 12 because they are beginning. They're beginning that what? They are saying that that asset was sold off. That asset was sold off on 1st, and this is how it will appear. The depreciation for that, it will be 7 out of 12 times the 200,000. Let me hope that's clear. Then when if at all remember the question told me to draw the account for computer accumulated depreciation. So this is the T account. So remember, I got my depreciation expenses 200,000. I already catered for the zeros here. So I'll come on the credit side. The reason why I come on the credit side, it's because I told you before you do this question, you must cater for this. You must first deal with depreciation, and for this we say debit depreciation expense and then credit accumulated depreciation, so that we go on the credit side of the accumulated depreciation, we put their depreciation expense as shown below as this. So this is what I'm talking about. So 31st December 2022, we are having a depreciation expense which was 200, hence on 31st December still we are on 2020 we are having our balance carried down, since it's going to be our balancing figure as 200,000. So this will be my N1. So you can see, you can now compare. Then this is going to be carried to the next year, which is going to be 2021. So as 1st January 2021, balance carried down is going to be 200, which is still my N1. And then still in that same year, I had a depreciation expense which happened on 31st December 2021 as 200,000. So this plus this, I'm going to get 400. So meaning that this will be my balancing figure. So 31st December 2021, the balance carried down will be 400,000, which will be my N2. So I close them by 400 by 400,000. So this crosses over, goes this side. So 1st January 2022, my balance carried down is going to be 400,000, which is still my N2. And then I cater for the depreciation expense for that year, which is 31st December, which happened 31st December 2022. Depreciation expense, which is 200,000. So that when I add the 400 plus the 200, I get 600. So this will balance off, and then this side we shall have to get a balancing figure, which will be 600, and that will be at 31st December 2022, balance carried down of 600,000, which will be my N3. So this N3 comes to the year of disposal, which is 1st January 2023, balance carried down of 600, and then it had a depreciation expense, which on 31st December 2023, depreciation expense of 200. So 600 plus 200 to get 800, and this will be the balancing figure. But this time round, I don't say balance carried down, I close it off to the disposal account, which is 800,000. So this will be my N4. So I close. So with that, I take it to the disposal account on the credit side. So one more thing I want you to note on this is, if at all the question has asked that, maybe, let me go back on the question. If at all the question said, maybe it had some other information. They said that they do not recognize their depreciation in the year of disposal. It will mean this will affect the accumulated depreciation account. It will mean that I will not cater for the depreciation in the year of disposal, because they do not cater for depreciation in the year of disposal. So meaning I will end here. I'll end here, and then I close it off. I close this off to disposal account. But that's not the case. For this question, they charge full year depreciation. So meaning this has to go to the disposal account, but on the credit side. We can now go to the third one. So we are going to recognize, which is recognition of the payment, which was cash. So you know that this person received 1.6 million. So we are going to debit cash, and then since cash is an asset, and then credit disposal account, and this will go to the disposal account. Since we are not required to show the cash account, we shall only show this treatment on the disposal account. Then the fourth one, I told you, once you complete all the 4 steps, you will just know that you're done with that, with the disposal, and the number will be complete. So step number 4 is determining a gain or loss on disposal. So I had not yet drawn my T account for computer disposal account. So I draw it debit side, credit side. I cater for the 3 zeros. So now I've already noted that the first one, which was 31st December 2023, after me transferring the cost to disposal account, this is what happened. I'll just come and I say computer 200,000. This is where it came from. Step number 1. So it came from here. This was step number 1. Me transferring the cost of that asset being disposed of to the disposal account on the credit side. So this is step number 1. Step number 2, I cater for accumulated depreciation, which happened on 31st still December 2023. So I showed you here, which is this number 2. This was number 2. Transfer the accumulated depreciation of that asset, and I showed you how to you get it. And then this, you close it off, you take it to the disposal account on the credit side. So which is going to be this. And then the third one is the recognition of the payment, which you can see here that per the entry they debited cash account by 1.6, which they didn't tell us to draft, and then credit disposal account, which they told us to draft. This means that you will go on the credit side of the disposal account and you put there 1.6 like this. So same applies to the other entries. You realize that they were saying go like on the credits, go on the credits on the debit side and put there this. Go on the credit side of the accumulated of the disposal, put the accumulated depreciation. That is per second step. Then third step, go on the credit side of the disposal account and put there the cash that you received, which was 1.6. Then I told you, in order to determine a gain or a loss on disposal, which is going to be step number 4, we shall have to see which one is the balancing figure. So when I add this and this, I get 2,400, and then when I add this, you realize that this figure is less and this one is more. So this side will have a balancing figure, which will be of 400. So I say any balancing figure that I get, either this side or this side, whatever balancing figure that I'll be having, I'll call it, if it's on the debit side, it is profit on disposal. If it is on the credit side, it is loss on disposal. So for this case, it is on the debit side. So this is a profit on disposal, which will be 400. So I add this plus this, I get 2,400. And with that will be the end of the question. And that is how we handle disposal questions. Thank you for listening. Make sure you subscribe to the channel.